Welcome to this video, which is an effort by us to help you understand the world of growth stocks in a clear and quick manner. So, let us begin with understanding what is a growth stock. A growth stock is any share of a company which is expected to grow at a significantly higher rate as compared to the rate at which the market is growing. And there are three signs which we have jotted down for you to help you identify a growth stock. The first one is that you will be seeing growth in the sales and earnings of a company. What this means is that the sales of the company would be growing rapidly, which in turn will be resulting in its earnings increasing very fast. The second sign is that the company would usually be offering a very unique product or service. For example, it could be a new company which could be having a very innovative business model. And the third one, and a very important characteristic of a growth stock, is that they usually tend to have high price tag. So what this means is that the price that you are paying for a share today, the company may not be making as much money, though this may or may not be the case in the future. So then what are the merits of a growth stock? First one is that growth stocks have high growth potential. So this is indicated by potential for substantial capital appreciation in the long term. What this means is that the price of the stock could eventually become much higher than the price at which it was originally purchased. And these companies usually tend to end up dominating their market or becoming market leaders. So as they grow larger, they become more efficient, leading to lower costs and higher profits. This concept is also known as economies of scale. The third one is that such companies are usually very innovative and they are at the forefront of technological advancements in their industries. You will see them always bringing out cheaper and easier ways to carry out business compared to their peers in the same industry. Such companies would also usually be giving better returns to their investors in the stock market. And the last one is that these companies will be creating wealth for their investors in the long run. So when such companies grow their business, the price of the stock grows significantly. And selling such stocks at the right time, the investor ends up making a lot of money. So along with all these tempting merits, growth stocks have some demerits as well. In the short term, the price of the growth stock can fluctuate significantly, which could lead to losses for an investor. So you have to look out for volatility in the price of the share or stock. Secondly, investing in growth stocks is high risk. It is not meant for everyone. Sometimes the company may not end up building its business the way it was expected, and it could lead to significant losses for its investors. The third problem is that because there is so much expectation on the company's growth in the future, the stocks of these companies usually tend to be overvalued. And the company, finally, again, I'm re emphasizing, may not grow or it may grow at a slower pace than expected. These companies are also, you will notice, they will be more sensitive to economic downturns. The stock price of such companies may see a steeper fall when there is trouble in the economy as compared to large, well established, old companies. And last is that there may be no dividend payout for the investors at some point of time in the journey of such companies because they will usually be reinvesting their money back into their businesses rather than distributing profits to its investors. You see, their goal is to grow the company and become bigger. So, we hope we were able to add some value to your understanding of growth stocks today. This is a short video which enumerates the signs in which you by which you can identify growth stocks, its merits and demerits. And please stay tuned to our channel to learn more about discovering growth stocks.